And now it's my great pleasure to introduce Hecla Mining. Hecla was founded in 1891 and is the largest silver producer in the United States. In addition to operating mines in Alaska, Idaho, and Quebec, the company has a number of exploration properties and pre-development projects in world-class silver and gold mining districts throughout North America. Please help me welcome CEO Phil Baker to the stage.
Before you sit down...
Oh my God, you're going to give me grief.
I just want you to know that Hecla was part of the original Denver Gold Group.
Yes.
And I personally was in the first group that went to Zurich.
Yes.
And this conference, I think, has the potential to be have the same impact that Denver Gold has had. So thank you very much for putting this together.
Thank you. I really appreciate it.
You're welcome. The other thing I'll mention, Joanne, is that we've been telling people for some time that Hecla is net zero for emissions for 1 and 2, and this is really the first time that I've seen us get traction with that announcement. So, I really appreciate the fact that you're having this conference. So Hecla, we are the United States' largest silver producer and have been for the better part of probably 70 or so years out of the last 130 years. Now, I'm going to make some forward-looking statements, and they're going to be subject to the cautions found on this page and on the next page and on our 10K and 10Q and all sorts of other filings. So please look at those. So 130 years of Hecla Mining Company. We're a company that has been publicly traded since 1913. We have been on the New York Stock Exchange since 1964. We actually have brand value as a silver mining company. And when the silver price moves, Hecla Mining Company moves even more. And there's been a number of occasions where we have been the best performing stock on the New York Stock Exchange. So we have brand value in Hecla. And the reason we have that is because we have super high quality assets. You can see 3 of the 3 mines we have here, the 2 silver mines that are in the United States, our gold mine that's in Quebec, and then we have another dozen or so exploration development projects across the United States, Canada, and Mexico. We also are a large producer of base metals that come with our silver. And we're just a company who has focused on silver, but we're also this gold producer. And I'm going to talk about Casa Berardi, and one of the reasons why we're happy to have this conference in Quebec is because of our Casa Berardi operation, which is the 4th largest gold producer in Quebec. The mines we have are, for the most part, small underground mines, and as a result of that, they don't have the same sort of capital requirements that you see in other operations. And so we generate a lot of free cash flow. Let me talk about silver for a second and our standing as the silver producer. We actually produce 40% of all the silver that is mined in the United States. And the United States is roughly the 7th or 8th largest silver producer in the world. Canada produces about a quarter of the silver that is produced in the United States. And if you look at the countries where silver is primarily produced, you can see that it's Peru, Mexico, and China. Countries that are going through, to one degree or another, either turmoil or they're not really a friend of the United States and Canada. I said that we have operations that generate strong cash flow. I want you to focus your attention on that first bullet point. So over the last 2 years, our operations have generated $230 million of free cash cash flow. And what that's done is gone on to strengthen our balance sheet. You can see that we have cash of $212 million. You can see we have our revolving credit facility. So we have a lot of financial capacity. You can see the breakdown of our revenue. Basically, about 25% of the revenue is from lead and zinc. And then you can see the silver and the gold are roughly equivalent. Now, we're in this environment of inflation, and Hecla is subject to inflation like all other companies, like each of us. But relative to other mining companies, we're fortunate because we do have such small operations. You know, we move in the course of a year the same number of tons that our larger competitors move in one day. And so when you think about that effect of moving all those tons of rock and the effect that inflation has on that, it's a multiplier effect. We don't have that. You can see where we do have our costs. Diesel only represents 4% of our total costs because the majority of our power is generated from hydro. That's one of the reasons why we were able to be net zero, is because we just generate so few emissions. You can see the other costs, and like everyone, we'll be subject to a level of inflation, with labor being our largest cost. This cash flow generation that we have allows us to pay a dividend, and the dividend we pay is unique because in addition to a normal dividend of $0.015 a share, we also pay a dividend that's tied to the silver price. So we believe when the silver price goes up, we need to give the money back to shareholders, and so starting at $20, we give an additional amount to shareholders that increases with every $5 increment. Basically, you're getting a return on silver that you don't get other than by holding the stock of Hecla. So let me talk about the operations, starting with Casa Berardi, since we're here in Quebec, fourth largest gold producer in the province. It's an asset that we've owned since 2013. We acquired this asset for a number of reasons, primarily because our long-term goal is to be an S&P 500 company, and that might sound like a bold ambition, but I think with decarbonization that's happening in our economy across the world, the value of metals is going to go up, and there's going to be demand by investors to have exposure to that, and particularly in the S&P 500. And so we think there'll be an opportunity over the course of the next decade or so in order to achieve that goal. So to do that, we got to be bigger. And so in 2013, we acquired the Casa Berardi mine, and we have been operating it for the past 9 years. I want to just mention I have with me our CFO of our Canadian operations, Chris McLean, who is in Val-d'Or. And certainly if you have any questions here in Quebec, he's the man to see. Now, the Casa Berardi property is a 35-kilometer strike link along the Casa Berardi break. And only a small portion of this has been explored, roughly 4 kilometers, and we're still in the midst of that exploration. And we currently have a mine life of 14 years. Earlier this year, we filed with the SEC a technical report on Casa Berardi and on our other 2 operations that gives you a view of this mine for the next, as well as our other mines, for the next 15 years. So I encourage you to look at that disclosure. The thing that has really changed with our ownership is the increase in throughput that we've had at this mine. This mine was roughly 2,000 tons a day. Today we're at 4,000 tons. It was just an underground mine. Today it's both underground and open pit. And it's a free cash flow generating mine. One of the criteria that we have for our mines is we want them each to contribute free cash flow and to do it on a consistent basis, and Casa has certainly done that. Now, the story at Casa doesn't end with the current operations. It really is this exploration potential that we have. And this is within that 4-kilometer area. You can see that we have exploration that's done at the bottom of each of these plunging ore bodies, but we still have lots of exploration to do between those plunges, and I expect to see that happen over the course of the coming decade. In addition to that, we have surface exploration that we are doing, and off this map, there's even more exploration that is happening. Now let's look at Greens Creek. Greens Creek represents half of our revenue. It is an extraordinary mine. It's a mine that started in 1987. It's a mine that for the first 10 years actually lost money. It consumed about $500 million of capital at that time. But since that date, since 1997, it's generated about $2.3 billion of free cash flow. It's generated over $1 billion of free cash flow since we've owned all of the mine. Now, we owned a portion of it back at the early days, but since 2008, we've owned the whole mine. And the reserve life on this mine is currently 14 years. When the mine started, the reserve life was 7 years. So we're anticipating this mine will again continue to have exploration success, and we would anticipate the mine life will probably be in excess of another 20 years. This mine generates just an extraordinary amount of free cash flow, and it's a mine that is constantly innovating. We're looking at operating the mill at a higher throughput rate. We're looking at more automation within the mines. We currently muck during shift change from the surface. We're looking at trucks being automated from the bottom of the mines. There's a lot of interesting things going on at Greens Creek. And then the Lucky Friday. And the Lucky Friday, despite it being 80 years old this year, is undergoing the greatest change of any of our mines. And what's happening there, it's really two things. One, the grade of the ore body just keeps getting better as we go deeper. Significantly higher grade that's going to allow the mine to increase, with the same number of tons, to increase the amount of silver production. But secondly, this mine we have developed a brand new mining method. This is called the Underhand closed bench mining method. And we've come up with this mining method because the challenge this mine has, because it's so deep, it is at the very bottom of the mine where you see the word foreshaft. That's 2 miles below the surface. And that the distance that you see across in that colored area is roughly ½ mile. So you have this very, very large ore body, but it's very deep, and you end up having, this mine ends up being very seismically active when we're mining. And so over the last, basically 6-7 years, we've been trying to figure out how do we mine this in a way that manages the seismicity. And so 2 years ago, we developed this underhand closed bench, and you can see the image on the right. Basically, what we've done is we've gone from a little blast, a blast of about 8 feet of rock, to a big blast, which is 300 feet of rock by 30 feet by 9 feet, and we blast it all at one time, and it causes the seismicity to happen with the blast. The other thing it does is it makes it a safer mine. So we're now able to operate this mine basically at 100% of the time, while previously under the old mining method, we could only operate at 75% of the time. So our miners are safer and the productivity goes up. We anticipate this mine will end up being a 6 million ounce producer in a couple of years, and that's going from 2 million ounces 2 years ago, 3.5 million ounces last year, 4.2 million ounces this year, and over 5 million ounces next year. So just a continually growing production rate with the same cost structure. And then just a couple of minutes on silver, because I think there's one other silver company that I'm aware of here, but silver is just an incredible metal, so I thought I should just take a moment just to describe it. Realize that silver has had a long history in mankind, monetary metal for a long period of time, and in 1900, the Brownie camera, so those of you that are old enough, there was a camera that Kodak developed called the Brownie camera, and it started in 1900. And what that did, that was sort of the cell phone of the day as far as, you know, taking pictures. What that did is it allowed people to take their own images. Up to that point, you were relying on professional photographers. And so because of that, the demand for silver rose and kept rising until 1999, when it reached its peak at about 250 million ounces of silver. Well, since that time, it's completely fallen off, right? You have almost no demand for silver. But what's happened in the meantime is in the Second World War that was discovered that there were applications that they were using copper for that were better used for silver. And so that industrial demand has grown. And then more recently, we've had this desire to decarbonize the economy, and to do that, you really need solar energy. And to have solar energy, it really relies upon silver. So when we look at the future for silver, we're currently at a deficit of somewhere between 50 and 100 million ounces a year. We think that deficit will continue to grow in terms of what's produced and what's recycled and what's demanded. And with that growth, what you're going to have is higher silver prices for miners to develop new silver mines, or for investors who have this above ground stocks to be willing to sell the silver to meet the demand requirements. So in the 130-year history of Hecla, I'm not sure there's been a time where the outlook for the company has been better than it is today. And I have 1 minute left, so I'd be happy to take any questions that anyone might have. Any questions?
You're getting off easy, Phil.
All right.
Any questions?
Thank you very much again.
And thank you, Phil, for your kind words.
Okay.
I really appreciate it.